Hey everybody, Boris Lasser, BK Forest. Welcome to the weekly technicals for the majors for Euro dollar, dollar yen, pound dollar for September 4th through September 8th, 2017. Back to work is the theme this week. Everybody getting back to work, back to school, certainly in the Northern Hemisphere, as markets get a lot more serious about central bank meetings, about policy divergence, and about all sorts of other matters. This should be a very, very powerful week as far as guidance goes. Let's take a look at the calendar here and just look at what the majors has to offer. Not a lot of U.S. data, because we've already, of course, obviously had the non-farm payrolls that we just had today, but quite a lot of other data from the Eurozone and from UK that's going to be important. Of course, on the Eurozone side, we have the ECB meeting coming up on Thursday. That's going to be critical, especially, and this is interesting, because today the ECB came in and kind of really tried to kneecap the euro as just as it was about ready to rise against the relatively weak non-farm payrolls. They came out again reaffirming the fact that they have zero intention in tightening monetary policy in October. Clearly, as I've been saying, they're concerned about the 120 level. And they kind of played it, I think, pretty smart. They let the euro go to 120 before they started to jawbone it down. And then they basically used the U.S. Weakness data as a way to kind of trip any euro longs by coming out with a jawboning statement. I think it's interesting. I mean, I really like the way the ECB is manipulating the market at this point. They're playing it right. If they come in, as I suspect, on Thursday and just without any doubt, with full confidence, say there's nothing going to be happening, perhaps even until 2018, that could provide the impetus to move the euro to the downside even further. We had a big flame out in the euro on the technical side. We'll just take a look at it in just 1 second. And I think that's going to be a continuation trade. So ECB basically kneecapping the euro could be the big story this week as we're looking on the major side. The other big story is the relative strength of cable. We had good PMI data. Nothing really going on as far as the monetary policy goes, but we do have several data points out of UK, including the PMI services, which is going to be very important. If that prints well, if the manufacturing data, industrial production data, both of those print well, all of that is supportive. It's not so much a question that the cable is going to run away to the upside. It's just that it's going to stay stationary. It looks relatively well bid at these levels, despite all of the issues of Brexit. It seems like for now, the Brexit issue is sort of a secondary issue to the market. They're just looking more at the economic data. UK data seems to be doing okay, and they're holding the ground, holding a bid. I talked about last week my favorite trade being euro pound to the short side. It turned out to be an absolutely awesome trade last week, and I think there's more continuation to go on that side. And the other interesting story here is that the dollar has stopped falling despite lackluster US data. And I think that's part of the story here, that maybe everything is bottoming out. Maybe everything is kind of flaming out. Unbelievable. It's late at night, Friday night, and I can't avoid the sirens. All right, we'll let the ambulances go by. So I think the interesting point here is rates. U.S. rates certainly are at the very, very low end of it. The 10-year is at 2.16 on Friday night as I close this out. But they've also seemed to have bottomed out. I think as long as U.S. rates stay above the 210 level on a 10-year, dollar yen appears to have a base. Remember, you don't have to have the Fed tighten. You just have to have sort of the ECB not tighten. Creates a relative strength bid to the dollar. And if U.S. yields begin to just percolate a little bit higher, we do have one possible economic catalyst, the ISM non-manufacturing. Manufacturing came in better than expected. If this one comes in a little bit hotter than expected, there's no reason to think that we can't take 111 as we go forward. So let's take a look at the charts here and just see how the week shapes up. Here's the flame out in the euro. And I think this is really the key thing. When you're looking technically at how the structure goes, there's a lot of very powerful analogs here on the technical side. The most important one, of course, was this week in 2015, which I remember as though it was happened yesterday, when the ECB just kneecapped the euro, turned it to the downside. They didn't like the euro coming up to the 120 level then. They don't like having it come up to the 120 level now, and they talked it down It took a couple of weeks to really take the euro down, and I don't think it's gonna have a nearly as strong an unwind as it did then. But I do think there's a potential here for the euro, especially if they continue talking it down, take it down to 117, perhaps even the 115 level ultimately as a trade. In any case, only a full reversal and a takeout of the 120.50 level would completely negate this bearish structure. We hit sentiment peak. We had a big reversal candle. You have to trade to the downside unless proven otherwise on the technical side. Similarly, look at the very positive trade. Let me actually get rid of this. Look at a very positive trade on the yen. You had essentially a very bullish candle forming on the weeklies here, where we tested the bottom and ended up on the highs of the week. That's a very bullish consolidation breakout candle. We definitely held the 108.50, 108 support, and now really have the full potential here to take out the 111s, which is the next level the shorts are going to be squeezed out at. There's a lot of late shorts, a lot of old shorts here that are trapped at the 108, 108.50 level, and the higher this thing squeezes, the more they're going to be forced to cover. So I think it's possible here to see 11, maybe 11.50, possibly even 12, especially if we get good positive US data as the week continues. So dollar yen, technically very bullish construct here. You got to believe there's more continuation here this week after the big turn signal that we saw. And then last but not least, not much really going on in cable, and it doesn't have to be much going on in cable. My argument here is that cable just simply stays stationary, maybe around 20, 29, 30, and everything else falls around it, which makes it a relative strength trade as we go forward. So that's basically how the week shapes up. I really like being short euro. I like being long dollar yen, and cable is essentially a relative strength trade that we can be looking for as the week develops. ECB, the marquee event this week. Obviously, if Draghi is not dovish, if he doesn't talk the euro, a lot of these trends could reverse very quickly. But assuming that he does, and assuming that he makes a stand here and he drives it into the 117 level, we have more downside to go. Wish you guys the best luck, the best of trading. Boris Schlossberg, over and out.